From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Good afternoon, welcome to the COB. It's great to have your company this afternoon. My name's Kyle Rodder, I'm with Danny Okoye, and Danny, we've broken the run.
Yes, I know, it's looking rather nice. It seems as though the ASX 200 is up about 91 points at the moment, or 1.3%, but we'll have to wait for the final trades to come through.
Yeah, we'll see how the COB 200 has finished the day's trade, and there we go, up 1.21%, so right at the highs of the day. That's a good sign, I guess you could say. Again, it's been a pretty, dreadful 3 or 4 days of trade, so some relief there. We'll, I guess, have to wait and see whether it's, a meaningful bounce or the dead cat variety. But let's get across the three themes, shall we? And I think that's the biggest one, of course, is that we have seen this bounce in the market. But a few other things to keep an eye on for our three themes for the day. And, another one is just consumer confidence at the moment, not particularly strong.
No.
Nervous Nelly still.
Yes, well, that's to be expected though, isn't it? With, we're still in a potentially rate hiking cycle. We're certainly watching to see what the June quarter CPI does towards the end of the month. Yes, so consumers, as far as I can tell, they're all still busy overseas spending.
Yeah, I would say, maybe the circles that
No, we've got lots of guests away, don't we?
We do have that, that's true. Plenty of folks that we do normally speak to of having fun in a different part of the world, but that's good on them, of course. And I suppose the other thing maybe driving the markets a little bit today was some, proactivity from Chinese policymakers, or at least some signals of further support that seems to have boosted our commodity plays and seems to have also supported some of the equities across the broader Asian region.
Absolutely, and isn't that interesting? Bond yields, they were actually coming down, but looks like they've just ticked back up again. I thought, that we had some weakness there, which was supporting some of the stocks. But you're absolutely right. Some of those prices, futures, the Dalian iron ore futures were up today. Yeah, so
a few things there just to keep an eye on, and reasons perhaps that we have seen the market push a little higher today. But we have had some, news from a corporate and economic front. Mesoblast. Guidance upgrade, I believe.
Absolutely.
And we will get to that eventually, of course, in terms of the leaders and laggards, but it was certainly towards the top of the market today.
Totally, I think it was up about 32%.
Wow.
So we just ran through that with Marcus Stroger, also from Shaw and Partners, and they have upgraded both full year and 23 and full year 24 guidance, and they're going to be cash flow positive by the end this fourth quarter of full year 23. So the market really, really liking that. Might have been some short covering, but nevertheless, some happy shareholders. Yeah,
and a upside surprise. And we've actually had a couple of them. We had Ardent Legend yesterday, also perhaps defying some of the doom and gloom. So, maybe the bar's set low, maybe everyone's too pessimistic. At least we can only hope, I guess.
Yeah, and I think probably we can expect ongoing confessions going if earnings have materially changed from guidance, then companies are obliged to come out before the August reporting season. Yeah,
exactly. Stock of the day, it was InvoCare. Have you ever had much of an interest in it?
I did hold it years ago.
Right.
But no longer.
Yeah, okay, no longer. Well, it might no longer be there to...
I know, another stock that's going to disappear.
Yeah, exactly.
It seems to be a conga line of going off the ASX at the moment. It's rather worrying.
Exactly, out the door. So, for the limited time that you may have, we spoke to Philip Pepe from Shaw and Partners and Mark Moreland from Team Invest about, whether they'd be a buyer of InvoCare here.
In my industry called time kills all deals,
right?
And you don't love an extension. And I'm not overly familiar with the transaction, but based on what's been released today, there's been no suggestion in the offer price will be upped. It's just more confirmation of what's public, and what's public is a $13 per share takeover offer. Share price is $12.50, $12.60, that sort of range. If it goes ahead, you still have to wait a few weeks to get your money. I would take the money and run. It seems like there's limited upside from $13, maybe get a frank dividend in there somewhere. But I would just say it's taking too long. Put the money into something else. It's had a good bounce off its lows. I would sell and let somebody else worry about it.
Definitely sell now. Yep. It's too close to the number, and I totally agree. There's a chance that it falls through. Yeah. If you actually look at it, the company InvoCare was going well in 2017, and since then it's been pretty well downhill in a zigzag pattern. But their earnings have dropped over the last 5 years.
There you go. Maybe something about looking gift horses in the mouth when it comes to that one.
Indeed,
Take the money and run.
exactly. Take the money and run. Absolutely.
Yeah. Okay. Well, let's get to our guest for the afternoon now. Martin Crabb from Shaw and Partners joins us at the desk. Martin, great to see you there.
Good to see you too.
Do you have a view on InvoCare? It was our stock of the day, of course. No. If you were in it now, you just again take the money and run potentially.
I reckon when a bidder comes along, you can try and play a second guess. Oh, someone's going to come in over the top, or they're going to increase their bid. Just sell. Just move on. Time to move on. Take the money and run.
Yeah. Okay. Simple as that.
Pretty much.
The market today, though, a little bit of a bounce. It was really quite broad-based. Yeah. Sort of snapped that 4 sessions of losses. I mean, was there a catalyst there, or just a bit of seller's fatigue?
Yeah. Well, we sold off 3% in the first few days of the month, so it was a pretty sharp sell-off. And I think just a little bit of a recovery from that, a little bit of a positive lead from overseas. Also positioning ahead of the CPI tomorrow night. So if I was a trader, I would not have big bets out there at the moment. So if anyone's a little bit short, maybe just thinking about covering that trade, because that number could move the markets quite significantly. So maybe a little bit of that. Noises out of China again. The Chinese language newspapers running stories that they're about to announce something, and we've been hearing this all year. We just haven't seen anything. So, iron ore was down $4 yesterday, and I think it bounced a little bit today. So it's a little bit of a more positive tone, but I just think the market was a little bit very, very short-term oversold, and people just putting a bit of money to work.
Yeah, apparently volumes were quite light too, so it doesn't take much, does it, to move share prices?
Well, as you said, I mean, half the streets in Milan or London or Paris or the Tour de France or Wimbledon or there's a few of us working, but not many.
Let's move on to some of the economic numbers, and I think we've got a chart here that you brought in on consumer spending, which is starting to look a little bit, continues to trend down. Hopefully, there we go. There's the chart. How are you seeing
So the
that?
Australian Bureau of Statistics put together this experimental measure of household spending, because obviously it's a difficult thing to measure when you've got 26 million people running around spending money. But they've been doing this for a few years now, and it just gives us a gauge on month-to-month spending patterns, and it does correlate pretty well with what we're seeing from Westpac and ANZ's card data, because they publish that regular basis too. But the interesting thing is discretionary spending is now negative for the year. So, and this is in nominal terms, remember, Danny, because inflation's running at 7-8%. So in real terms, discretionary spending is -6, -7, which is recessionary levels. So and it doesn't look like from the more timely data that we're seeing that that's turned around. Staple spending is really being held up by prices as well, because we know that healthcare costs have gone up, insurance costs have gone up, energy bills have gone up, etc., etc. So really, where you've got the choice to make, people are reducing that spending, and you can see that if you overlaid the cash market, you'd probably see that coinciding when the cash rates really started to go up. People said, no, we need to cut back spending, and it also correlates with the fixed to floating roll off, because that's really happened May, June, July. So you'll see that probably go lower again in the next couple of months as well. I think CBA put out a study on spending intentions, so not actual spending, but spending intentions, that also showed a big drop in consumer spending intentions. So things don't look good for retailers at the moment, especially discretionary ones.
Sorry, I'm going to be annoying, because when we think about it, some of those price increases, like for insurance, 15, 20%, gas bills, electricity bills, I mean,
rent.
Healthcare, rent, they haven't all come through yet. So it does kind of beggar the thing, like, wow, this could really head south
there's a big
in
squeeze.
September, October, November, couldn't it?
Yeah. The question for investors is, what's priced in, because by the time the data becomes really obvious, the market will have gone the other way. I mean, a really good example is US housing stocks. I mean, the US housing market's just gone one way all year and it's down, and yet you look at James Hardie and all these other US builders and they're up 60%. So it's like, at what point do you look at these stocks and go, this perilous outlook is really already priced in. It's my buy. The downgrade that they're going to inevitably have is my buying opportunity. It's not a selling opportunity.
Indeed.
What about leisure spend? We've also got a chart on that too. I suppose it dovetails nicely into the story we were talking about before, which was around ardent leisures. Seemingly better than expected results. I mean, are people still going out and, I guess, spending at hotels, cafes, and restaurants? What are we looking at here?
Yeah, well, this is the category of discretionary spending that's not going down. And you just have to walk around any CBD or any tourist area in any city, and you can't get a table. Saturdays, Sundays, places are packed. Even in the middle of winter, like Vivid in Sydney, which just finished, that was packed. Bastille Day this weekend, you won't be able to move down a Circular Quay. So that's one category that's holding up quite well. And I think it's just probably still a lag of the lockdown. We just got we didn't get to do anything. We didn't catch up with friends. We didn't take the kids away on holiday, and so we're still really enjoying that. And they don't split out travel, especially international travel, but I'd suggest that that's pretty high too. So like all the airlines are running flat out, and yet they're having cancellations because of the wind. It's terrible. But but I think that's one. So that's one exception to the discretionary thing, is people saying, look, I'm going to cut down on a lot of other things, but when it comes to going and buying the family pizza on a Friday night or something, I'm still going to do that. Yeah.
Indeed. We don't want to be, dare I say, locked in, as they say.
Yeah.
Stimulus hopes from China. We've got an interesting chart as well that you brought along with BHP versus the Aussie iron ore price.
Yeah, so we're of the I suppose peak steel thesis, in that China has reached peak steel consumption in terms of going forward. They're going to use more scrap and less blast furnace produced steel. Therefore, the demand for iron ore and coal starts to fall. So that's been our thesis. Probably a little bit early on that, but just interesting to see. You come in today, the iron ore price is down $4. You go, well, okay, Fortescue, Rio, and BHP are all going to open down 1 or 2%, and they all open up. And it's like, this relationship's broken down. So a very strong correlation. And I could put Rio and Fortescue on there; it'd be the same thing. They all swim to the same tide. That relationship sort of broke down about 18 months ago, and BHP's it's behaving less like an iron ore stock and more like something else. So the thesis there is that copper. So Evolution Mining and BHP are going to be a big chunk of their operations are going to be copper, obviously because of the Oz Minerals transaction, but also Evolution buying Ernst Henry. So people are attracted to the fact that I need to get exposure to copper, and it's really hard. There's very few in Australia. You've really got to go down the market cap to Sandfire. There's nothing in the 100. So I think people are maybe looking at BHP and, to a lesser extent, Evolution as a copper proxy, and that would probably help explain the fact that why these guys are being delinked from copper. Even Rio's got quite substantial copper assets as well. So I think one of the interesting things about BHP is once it sells all its coal assets and energy assets, it's copper and iron ore. That's it. It's not a diversified business.
When's the potash coming on stream?
Oh, look, that's very, very long term. That won't contribute for a decade. It'll be massive.
Yeah.
But it's more a 2030 sort of story rather than sooner than that. So they will evolve into a more diversified. But you kind of got to think they're going to go and buy something.
Yes, indeed.
Yeah.
Indeed, it makes sense.
Yeah.
Lest we forget, though, the Nasdaq 100 is going to rebalance. There was talk of that in New York
well, I just picked this
overnight.
up today, and I thought it was really interesting. There's a quirky thing about the way they build the Nasdaq index. If the top stocks can start contributing more than a certain percentage, they re-weight them down. And I don't know how much money follows these indices, but I imagine it's massive. And I think Tesla was the stock that once it went through 4.8% or something like that, it triggered this clause that's in the index construction that says they need to downweight the largest components of the index, because you don't want what Australia has, where you've got BHP at 12 and CSL at 10 and CBA at 8. That's your index pretty much. You don't want something like that. So I can't remember the dates. I think I sent the dates through, but
It's the end of July, I think.
yeah. So the end of this month there'll be a downweighting of some of these mega caps. Now everyone's talking about the Magnificent Seven. About they've made 65% of all the increase in world equities this year. Global equities is 7
Huge,
stocks.
isn't it?
So there's going to be a downweight. So maybe that's just a catalyst for these. The PE premium is also 65% to the market, which has never happened before either. Maybe that's just a sign that mega tech story might just start having a few pins put in it. So look out for that.
Martin, really appreciate your insights as always. Martin Crabshaw and Partners, thank you so much for your time.
Thanks, Carl.
Thank you.
Okay, let's get to the leaders and laggards now. We already covered one of them, which was
Megaport, off
up
to the
31%,
races.
delightful. Still a bit of gold.
Absolutely, gold doing
going
very
on.
well. Absolutely.
Yeah, so that sort of was catalysed on Friday night. We've seen some weakness coming through in the US dollar the last few days. The dollar index is down quite considerably. Always good for gold prices. Meso Blast also up 6.6%. The laggards now. For the day, funnily enough, Santa Barbara, but we're still sort of talking about the own sort of very particular issues to that company, I guess, and how it's impacting its share price. But the losses were few and far between, which, for me, sometimes with my trader hat in the past, which was a little bit like what Martin was saying before, going into a risk event where you sort of reposition a little bit, especially after some selling. This sort of broad-based rally where nothing actually seems to fall particularly much always actually raises some level of concern rather than perhaps hope, but we'll, I guess, see once we get those CPI figures out. But as you can see there, Cromwell, Helios, Data 3, ASX, amongst the worst performers, but all down by less than 1%. To the small caps now, leaders and laggards, starting with the leaders, of course. Nothing out there that really jumps to me. Yeah, I don't know what language that is. It looks I would assume it's interplanetary, or a typo.
Danny butchering yet another name. My speciality.
I'm not going to try. We'll go to the laggards now, see if we can pronounce any of
Pacific
those.
Edge down 10%.
Yeah, most of those I feel pretty comfortable
Next Ed, that's been falling for the last couple of days, haven't it? They've had a
You
downgrade.
said it was downgrade, wasn't it?
Yeah.
Well,
They've got
down
some
6%
problems,
again.
I think, over in Europe, so off another 6%.
Right, okay, there you go.
Just having a look at the index. Oh, we'll go to what's on first.
Well, what's on, actually, if you would be so kind and type into that computer of yours there, forexfactory.com, there was some CPI data, employment data out of the UK, which could be interesting, that I think actually dropped at 4 o'clock. Because that's what's on overnight. We'll get that up now because there's a few things that we will be watching overnight. It's that UK labour market data. We might see if we can get that just up on our screens to get it across you what's going on. But there's also the German Zoo Economic Sentiment Survey out, which can be quite influential as well. But those UK employment numbers, claimant count change up by 25,000. Average earnings, though, up to 6.9%, which is increased by more than expected. And the previous number was upgraded. The unemployment rate also rose to 4%. Because,
Lots going on there, isn't there?
Yeah, that'll be interesting to see how the markets respond to that. Of course, the data has been very messy in the UK recently, and of course, well, I suppose just their economy, generally speaking, or at least the way that the Bank of England have had to approach things. Certainly a messy situation.
See, there we go. The bond markets, I think, are just doing a little bit of a...
Doing a jig.
Doing a little bit of a jig off the back of that. Interesting, though, isn't it?
Yeah,
because unemployment's going up,
Yeah, mixed data there. Let's look at what's coming up tomorrow, because we will have the RBNZ. And on top of that
Pause for the RBNZ.
That's the call, isn't it?
Yep, that is the call,
5.5%.
Correct. And also Mr. Lowe speaking, so that will be interesting.
Yeah, speaking in particular on the subject of that RBA review and some of the changes that are expected to come from it.
Seems to be quite a lot going on there, doesn't it?
Yeah, and
People
of course I'm sure he'll get grilled. Well, yeah, exactly. Getting, greener pastures. I guess. So I guess she's out of the running now, and we're probably only weeks away actually from finding out who will be the governor for the next 7 years or so. One would assume that Governor Lowe will not get another crack at things.
We don't know that.
We'll wait and see, of course, but I don't think he'd be at the top of the betting markets if there is such a thing. Sportsbet does everything, I suppose, and I'm not getting paid to say that. I don't gamble, but they'll bloody make a market on anything.
Correct, they will. They'll make a market on a market.
Market on a market. Well, they had a market on whether Kochie would cry on his last day. I'm in on a Sky, but we could have stitched that up easily. It would have been a huge capital injection into the business.
Oh dear. Anyway, moving on. I've got the ASX 200 actually up over 100 points, about 105 points, so 1.5%. So the SIBO going the other way. So I'm just going to refresh that just to make sure that my computer's not telling us little porky pies. No, I'm still getting that. So that's interesting. It looks like there was quite a bit of buying coming into those last few minutes here.
Lovely. Well, up 1.5% for the session. As you can see there, the SIBO up 1.2%. And I think there's a touch of buying going on in futures as well. I haven't checked in the last few hours. But nevertheless, it was a good day on the local market. Danny, what do you reckon? Wrap it up there?
Wrap it up there. Yes, just having a quick look. US futures are up. And well, it would be interesting to see if anyone's going to stay up for those Wednesday CPI numbers.
Oh, it's only 10:30 this Sunday. It's fantastic.
I know.
Get to bed relatively early. Anyway, I digress. Remember, you can catch up on all the news and interviews on your website and app. Otherwise, have a great night, and we will see you tomorrow morning.
Bye.